Is there anything in what you've seen or heard that is subtextually or subtly different than what you expected?
You know, look, I think the Fed made it clear that they knew if they started talking about changing their stance either on tapering assets or on the Fed funds rate, that would create a ripple through the markets. I don't think that was their objective today. They clearly don't want to be front and center in the news just yet. But they can't get around, or they couldn't get around, acknowledging that the economy has strengthened. We've seen it in areas like retail sales, like the earnings figures we're seeing. GDP growth will come out tomorrow. Unemployment, the jobs report have all been pretty phenomenal. Now, we heard from them last time that they don't want to make any decisions based on forecasts. They really want to see it in the data. Well, now we're starting to see it in the data. So, you know, while this meeting is probably quiet, we're not sure if that can last too much longer. We might start hearing a little bit more about tapering in their summer meetings. So something to think about as we go forward. I do think if this data trend continues, if the economy continues at this pace, they really do have to start thinking about removing crisis level accommodation.
So, Jim, let me just, and I'll come back to you, David, in just a sec. Jim, is the typical pattern, and we're looking down the road here, the typical pattern is that when the Fed begins to pull back on the asset purchases, that is a precursor to a higher interest rate?
Yeah, so sequencing does matter, and the Fed's credibility is at stake. They knew the data was going to be very strong, like everyone else did in the second quarter. So for them to change anything right now, it's probably premature, even probably in June. So typically what their MO is at the Jackson Hole Symposium, which is around the third week of August, they typically issue a lot of white papers that signal a possible change. And then at the September meeting, they typically change policy, which might be enacted. This could be tapering. That could be in December, or it could be in the beginning of 2022. So, yeah, I really do think that as soon as the Fed starts to talk about tapering, the market's going to say, okay, so the next move is a rate hike. Yeah. When is that coming? The sooner they talk about tapering, the sooner they have to talk about a rate hike. And that's what they want to postpone and push back.
So, David, final question. Get Kelly into the conversation here, too. The Fed used that word that you cited, transitory inflation. You have said that, there are obviously some symptoms and signs of inflation, rising commodity prices, supply chain snafus and the like. Do you think that the inflation that we're likely to see is transitory or potentially more sticky?
I think it's a little stickier than they think, because I think you're going to see a lot of wage growth here over the next year. These labor markets are tightening very fast here, and I think that's going to push up wages. So that's a little, more than just transitory. But I think the other issue here is asset prices, because we've seen stock prices go up 6% just since the last Fed meeting 6 weeks ago. And the problem is that these very low level of interest rates is really feeding asset bubbles too. And I think the Fed really needs to think about that. It shouldn't just be about inflation, goods and services. There are other downsides to having money this easy when the economy is doing this well.
Shepard Smith here. Thanks for watching CNBC on YouTube.